Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Your Stocks. Well, it's a Friday afternoon. It's that sort of a day. The Nifty is virtually at the low point of the day. We're keeping an eye out on the 10,826 mark. That's the intraday low. And the bulls will be hoping they can go ahead and defend that level. Select mid-cap stocks have seen selling all through the trading session. CET is one stock, in fact, that's down close to around 10%. So let's pull up the intraday chart there. You'll see a whole host of stocks. It's really the color that Ekta is wearing today. Ekta, you got it right. It's red on the screen.
Yes, absolutely, and no sort of respite which has come in with the 3% fall that we're seeing for the mid-cap index. That's what's happening with the markets and the top stories that we're tracking this afternoon. But CNBC TV18's Ronojoy Banerjee caught up with Maruti Suzuki's MD and began by asking him about Maruti's outlook on electrification of cars. Here is a slice of that exclusive conversation.
Pointed that we be with in case of the one with the electrification, that the purpose is to how we're saving the energy and how it contribute to the environment friendly. That is the key factor. In order to achieve, of course, we are taking the electric vehicle, implement the electric vehicle. On the other hand, we have to care that the CV engine to improving the fuel efficiency, to avoid pollution, those kind of improvement, new technology. That's why we propose already the hybridization of the vehicle. That is the key, one of the key technology, I believe. Also, there are some alternative factor. We should be studied those kind of factor.
So then, sir, then do you feel that going forward, there will be pure electric cars, there would be pure hybrid cars, and there could be milder hybrids. So this whole notion of a pure IC engine cars, that may cease to exist.
Yeah, I think so. We have to align that stronger hybrid, the mild hybrid, to improving fuel efficiency each vehicle. But affordability is a very important product. That the small car is that it is very difficult to increase in so much cost. That's why we have to consider some different options, right?
So then will Maruti look at electrifying the IC engine cars?
Yeah.
Some form of electrification?
Yeah, we try to do.
Because, so this is interesting because very recently, if you would have seen the news, Jaguar Land Rover has, they have said that by 2020, every car will have some form of electric motor. The pure IC engine cars will not be there. Volvo cars have said the same. So is Maruti Suzuki now, are you hinting at that as well? That going forward, there won't be any pure IC engine cars, even which are sort of IC engine, there will be some amount of electrification.
Yeah, pointed that how much environment friendly to power product we can prepare. If that of course true that hybridization we can improving 20%, 30% to fuel efficiency we have to take. Otherwise, sometimes the 5-10% of the improvement the mild hybrid system we are implementing. Even though we try to make effort, IC engine itself to improve the fuel efficiency. Those kind of combination is contributing to the total energy saving. That is our consideration for future.
So when will we see a Maruti then? Perhaps that there will be a point in Maruti's life where 100% of your cars will have some form of electric motor. How far away are we from that?
Model cycle is about a modification that about every 6 years the full model change.
Okay.
Based on this cycle, we have to consider those kind of change.
Okay. So say by 2030, let's just go by the target that that Siam is.
Yeah, I think so. That could be that almost the vehicle will be switching to some modification.
So that means you feel that by 2030, none of Maruti's cars would be pure IC engine cars as we know today.
I hope so, if we can achieve that,
Okay, all right, not too good. In fact, just take a look at the Nifty. We're virtually at the low point of the day. We are at the low point of the day. Mind you, we're at the low point of the day. There's been a fresh round of selling that's coming about. And that was the big fear all through the trading session, that in fact we could get a second bout of selling. That's precisely what's happened. Just take a look at it. Prakash is with us in the studio as well. He's been telling us the Nifty is not going to be able to defend the morning lows. Prakash, you want to comment on this? Where does this stop? We're just moving lower. India Bulls, housing finance, that's taken a knock. Lupin has taken a bit of a knock. Just take a look at this. You know, we hit around 10,826 in the morning. Then we bounced up close to around 50 points. But just in a matter of what, around 20 minutes, we have seen a quick 50-point slide there. Prakash, what are the levels we look at now?
I don't think it's stopping in a hurry. In the fresh part of selling has started now. It's going to go down. Nifty can see a slide to around 10,765. That's the next logical target. Today, tomorrow, yes, it's down. I would say that.
So if someone has a long position, you're telling him just pack your bags right now.
Absolutely, absolutely. Because market has seen the top that we have seen last week, 11,169. That's a very strong resistance for a long time to come. I don't think that's, yes.
But Prakash, you know, just want to add that how much of this can you decipher it being as a global meltdown that we're seeing, or how much of it is probably budget related?
Ekta, I don't look at the global thing, but when I look at the charts of India on a monthly time frame basis, if you're looking at the 2008 low, we have seen two corrections. The one correction was lasting for around 14 months. The second correction lasted 12 months. And after that, this had a target of 11,300 to 400. In the sub-target that you look at it, they had a target of 11,169. We have seen a high at 11,171. That's a precise target like a dot. I have not worked on the cycles, the time cycles, but looks like there's a top. If and the bar that is generated for the month of January is an exhaustion bar, which tells me I'm exhausted, I'm not going up. It tells me that it could pause here, it could correct here, you could consolidate. You can use any word you want to, but it's not going up in a hurry.
Okay, all right. So just about down 3.5% for the mid-cap index. That kind of route that we were seeing early in the morning is probably not as much right now, but we're seeing that second round of selling, like Nigel mentioned, come through. 750 points lower for the mid-cap index. The Bank Nifty is down 600 points. Absolute basis, the Bank Nifty is down 600 points as we speak. The Nifty is down 200 and the Sensex also is down 633 odd points. Just 6 stocks in the green within the Nifty space and just about holding on with a thread. It's only ITC which is managing to gain around 1.5%. For the markets at this point, there's no incremental sort of losses that we're seeing, but I just want to reiterate that we have a very weak advanced decline ratio that we've had all the way since the morning on our hands, but that stands at now, just to put it into perspective, 2,000 stocks declining on the National Stock Exchange and only 134 stocks advancing in terms of a ratio. So that's the kind of advanced decline ratio that we're working with, and you can see that it is just about expanding and the red line is just going further away from the green line at this point in time. So you can see the amount of pressure from the broader markets. The mid-cap index currently down 755 points. InfoEdge, however, is the stock that we're tracking now. They posted what was a weak set of numbers this quarter. Revenue growth was rather muted and the margins also were a bit pressured. Chintan Thakkar, the CFO of InfoEdge, joins in now. Chintan, hi. Thanks very much for joining in. Well, revenue was absolutely flat this quarter. What was the performance for your key websites and what's your outlook?
Well, we are based on the subscription revenue. So I think the way to really look at is a YOY growth. And it's 22% growth, you know. So, so we are very excited with the results because there's a 22% growth in revenue.
Okay, I was referring to it on a sequential basis.
Yeah, got it. Yeah.
Go ahead, go ahead.
Yeah. So as I said that I think it's a subscription-based revenue. So there is a kind of a cycle of renewal of all the subscription. So we have to really kind of look at it on a quarter to on YOY basis. And if you really look at YOY basis, we have grown by 22% in terms of revenue. Our billing growths are in about 19% on YOY. And if you look at profits, you know, they have gone up by 68% on YOY.
All right, Mr. Thakkar, no, we have most of your numbers. But I wanted to understand just one quick aspect. Some part of the street believes the real estate business can turn around. I'm looking at your segmental performance, and on the EBIT front, it's still reporting a loss of around 8 crores. Can that turn around? And if you could give us a timeline, when can that turn around?
Yeah. Well, in fact, if you really look at from the top line perspective on YOY, as I said, that in fact, 99 acres has grown by 54%. You know. And as we know that I think several quarters real estate has been kind of passing through, you know, particularly after demonetization, RERA. So I think it looks like that, you know, at least in this quarter we have seen that there is a recovery after demonetization, after, you know, RERA kind of, you know, concerns that we had. though it's kind of little early because it's just one quarterly numbers, but certainly it looks like it's on the upside. Obviously, we have started investing more on increasing our branding and kind of attract more traffic. So we have been spending more money in anticipation of revenue, and we are very hopeful that this business would recover much faster.
When will it turn around?
Well, I think in the overall scheme of internet business, I don't think that there's a big amount of cash loss that we are really burning. And if you look at the right from day one when we have started business till today, we would have invested something like 200 crore to build this business. So I don't think there's a significant amount that we have so far spent on this property, and it's already kind of showing a revenue growth of as you have seen 54%. So I think it's very quickly. It's too early. This is just third quarter. Maybe it's Q4, maybe it's Q1. But we are very hopeful that we are going in a positive direction.
Okay, Chintan, there are obviously concerns in terms of the economy when it comes to what's happening with job creation. So from that perspective, just wanted your thoughts in terms of what the recruitment business is looking like for the company. It was up around 3% on a Q-on-Q basis. What are the trends that you're seeing there?
Again, if you really look at YOY basis,
okay.
The recruitment business is up by 13%, and it's a very kind of a steady growth that we have been showing on YOY basis from quarter to quarter. So I think as I said that it's a steady. It's not like real estate business which has grown like 54%, but this has been a kind of a very steady business, and it continues to generate a lot of cash for us. And I think this quarter is just continuation of the same story.
Okay, all right. Chintan, final question then. You've sold some stake in Zomato. If you could just help us out with some numbers. This valuation, was it at par with the last transaction you did when you sold some stake the last time around? Is it even or is it a little lower?
Well, we have not sold Zomato so far. So if you have to really compare it, you have to compare with the valuation that the company might have got in their primary fund round.
Right.
Now, okay. Again, I think you need to distinguish between the primary fund valuation versus secondary fund valuation. But I would kind of generally say that I think the valuations have remained steady, and the post-money valuation, in fact, after this round, is in a little bit of excess of $1 billion.
Stocks that were up yesterday, that's Bajaj Auto. It came out with a set of numbers. The stock is down close to 6%. I think we should pull up the intraday chart on that one. And the markets as well are virtually at the low point of the day. But remember, Finance Minister Arun Jaitley delivered a political budget that lent big bonanzas to farmers as well as micro, small and medium enterprises. We spoke to Rhythm Desai of Morgan Stanley about the impact that this could have on the market, India's growth, as well as the rural economy going forward. Let's listen in to what he had to say.
This budget has no potential to affect this market. I think what's going to drive this market, which I've been saying for several months now, is global. So yes, if you are forecasting that the SPX is going to decline 10% in the coming 3 months or whatever, then of course the Nifty will go back to 4 digits. We have a equity bond valuation metric, which actually doesn't now look in favor of equities as such as it was at the start of last year. So the valuation between the two is well balanced, and therefore there is a case, I think, for some flows into bonds.
The Nikkei, that's under some pressure today. It's down close to around 1.5%.
The market is now likely to go through a phase where excesses will be flushed out of the system.
India should now, unfortunately, underperform global peers, emerging market peers by 5 to 10%.
80% of what's happening in the Nifty is global. A little bit is there about local, but I don't think this budget has created any additional local factor, not even capital gains tax.
0.8 lower. So it's not really all hell breaking loose. It's 10,920.
A tough call which was pending for a few years now on the long-term capital gains.
The market is collapsing in the mid-cap space at 2.5% lower.
BP Jeweler also hasn't bought any shares in Bakra. I think the bond market has overreacted.
There is no real freshness in the market, which is still down about 160 odd points or so.
Okay, easily the worst day of the current bull market that we have had. This is Closing Bell. I'm Anuj. With me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I like the way you described it. I was wondering whether you will say worst day in 2018, but no, I think it couldn't be better. Worst day of the bull market.
Yes.
You know, we are back down almost 800 points in the mid-cap index. The Nifty is sulking 2%. We are the worst performing markets across the globe. So how should one read this? I mean, because everybody's been saying that a lot of this probably is also global in nature because, you know, we had global headwinds.
Yeah.
What's caused today?
You know, today should tell a lot of people, not that, you know, people should not know, but that in equity markets, things can work both ways and do work both ways. And today is a case of gravity. You know, look, Surabhi, we could argue about it, you know, LTCG, whatever. This market had been giving warning signs about mid-caps, and we were discussing this, that, you know, excesses need to be flushed out. I think the market all through January gave you indications that some accident is around the corner. It's going to make the market healthy, no two ways about it. But in the process, it's going to hurt a lot of portfolios. We still don't know how, I mean, the nitty-gritties of that, how that will be implemented. That's hurting sentiment. There's been the global bond market sell-off, so that's the classical risk of. And I think what you're seeing right now, and it may continue for 1 or 2 more days, and then you will have a healthy market, is, which I spoke about in the morning as well, flushing out of excesses. That was built in. Every month, 14, 15 stocks were getting into F&O ban. You know, so many stocks were surging left, right, and center. Put-call ratio had gone to 2. There were classical signs of market heating up. We had clear melt-up in the index. And now, I think, just mean reversion, 10,800. Keep in mind, it was not long back that we were at 10,500 and still in a bull market. So, from that point of view, because we had that sharp 800-point rally, it's just, you know, correcting back some of those excesses.
Oh, absolutely. And by the way, we should also just keep bond yields in mind. There is a bit of a cool-off on the yields here in India, but none of that has managed to help sentiment in the equity market. The benchmark paper, whether you're looking at the 2027 or the 28 paper, 5-6 basis points off the highest level towards the close yesterday, but it hasn't helped the bulls' case. The other aspect of today's sell-off, Anuj, the vicious unwinding that continues to be underway in the mid-cap market. Now, what sense does one make of that? I mean, a stock like PC down 40% at one point in time, and, you know, it's just a lot of double-digit losses in that market.
You know, you need to rewind the, you know, what you're seeing is today's chart. Just, you know, go see the left. You know, when you're looking at some of these charts, you need to see what was there on the left. You know, some of these stocks, PC, for example, I think rallied from 200 to 700, if I'm not wrong, in a short period of time. Your CAT, for example, that had a big rally. A lot of stocks had huge rallies. And, you know, some of them, despite correcting 25-30%, are still in bull market. So, you know, why are we talking about even PC jewelers and all? You know, good quality stock like Tata Global is down today. Nothing wrong with that. But, you know, the way it had run up before that. So, that's seeing a bit of profit taking. But, you know, this is where you have to now separate, you know, the men from the boys, so to say, or, you know, the noise from the reality. The fact is that once all this correction is over, Surabhi, you will notice that many of the stocks which fell in sympathy would be the ones to you know, sharply bounce back. That will happen. The market will not end the bull market because there's been an introduction of long-term capital gains tax. That will not happen. But clearly there were some excesses which are now getting corrected.
Okay, and we still have 1 more hour to go before this tough session for the bulls.